All right, Raleigh, we're super excited today. And for anybody out there who's looking to buy a house in the near future, we have somebody who was very instrumental in helping us walk through that journey. If you've been following us for a little while now, you will see that we are first home buyers in Raleigh. And we have our very own mortgage broker, April Young Blackwell from Blackwell Mortgage. Thanks for joining us, April. And it's so good to sit down with you and meet you in person for the first time.
Absolutely. It's my pleasure. And thank you so much for inviting me today. I'm very excited.
Yeah. Obviously, it's no secret the real estate market's pretty nuts out there right now. I guess it's still nuts, is it? Like still going crazy? Is it toned down a little?
Nuts. So there were rumors like a couple months ago that it was softening. And I think that lasted for Labor Day. And then it just got back nuts again.
Just for one day.
I mean, it was like for that week that it was, I think it settled down just for whatever reason. People were on vacation or whatever, but we're still seeing people go crazy and overprice. So I keep in touch with my clients. I have a list of them that I just check in with every week or so. Hey, how's it going? And are you seeing anything? We're seeing plenty, but we're just getting outbid. We're getting outbid. And so the ones that are brave enough and have the means to are the ones that, they're putting down the smackdown offers is what I call them. And so it's smacking down is still winning bids. Yeah. You can't tread lightly. You have to be fully committed to going all in and just thinking about it. Unfortunately, for those who need time to think and calculate and make a good decision are going to be beat out by people who are acting quickly.
Yeah.
So it is not, I don't think it's backed off. I think it's just as crazy as it was when you guys were looking earlier this year.
No, we've got lots to talk about today. I'm excited to share all your insights and tips. But before we get into it, I'd like to hear, I'm sure the listeners would like to hear a bit of your background, like where you grew up, went to school, and how you got into the industry. Kind of paint the picture briefly.
Sure.
Yeah.
I am not a Raleigh native, although I have been here since 2001. So I've been here for 20 years. So I feel
that's pretty local.
Native-like.
You are.
But I did grow up in Orlando, Florida. And I went to University of Central Florida, University of South Carolina for my master's. And South Carolina got me closer to North Carolina. And I started in the financial industry in 1999. And that's what got me to Raleigh. And as most people would tell you who get into the mortgage space, it happens quite accidentally. I think it's like one of the best kept secrets in terms of a profession and a career. I'm so glad that I stumbled into it. It's been a huge blessing in my life, and it's been a great combination of my natural skills, my love for people, and my love for numbers.
It's going to be that. Yeah. Sorry.
Sure. I love both, and I get to combine those every day in troubleshooting scenarios, solving problems for people, and just getting to meet great people like you as well along the way.
Yeah, and so how do you stumble upon it? Like what kind of qualifications and things you need to be able to do it?
Yeah, like aptitudes or passions.
So the mortgage industry has a lot of different facets. So I'll just speak to the sales component of it, because essentially a mortgage loan originator is a sales professional. So the people skills are not negotiable. You have to be able to talk to people. With that being said, you do not have to be an extrovert. There are very successful introverted salespeople that I absolutely admire in this space. And I think that what really counts is that the person's ability to build trust. So you don't want to be such an extrovert or such a salesperson that you feel salesy to anyone. I think having that servant's heart and the desire to really care for people and to really meet their needs is really the number one. But in terms of personality, anyone extrovert, introvert could do that. Definitely analytical skills and math skills are essential in terms of being able to analyze someone's situation financially and then to match them to the right products and programs that their unique profile meets. Every person has their own unique financial DNA.
Yeah.
And so there's no two scenarios that are alike. And so just being able to customize on the fly, I call it like the Rolodex. There's like a Rolodex in my mind of the loans, programs, products, features, and the different lenders now that I work with. And so as I'm working with someone, I'm just sort of like sifting through all of the options and then coming up with like the best solution for the unique financial stamp that the person is bringing to the table.
Yeah, that was something I really loved working with you. We found out about you through Emily Gray from Locality, and it was the attitude that you had is we can figure something out that suits your situation and circumstances, because coming from being entrepreneurs, we've known many people and have always been told it's very difficult to get a mortgage because, you know, in the financial world, you're not seen as secure because you don't have that regular paycheck coming in. And so for Craig and I, we thought, oh, this is going to be so hard for us. We're not going to be able to do it. So it was so refreshing to talk with you, and your positive, upbeat attitude was like, we can work around this. We can figure something out and make it happen.
Thank you. One thing that really helps me work with self-employed borrowers is that I started my financial career as a business banker. And so for about 5 years, all I did all day, every day was review business financials. And I think that has given me like this unique skill set in this space that I don't feel intimidated or threatened by. And yours were not complex by any means, but a lot of times self-employed individuals have complex situations. And that I like love and live for that type of challenge. Like I'm like, oh, I get to use my brain today. You know? I mean, anyone can calculate somebody's salary, you know, and divide it by 12. I mean, that's very simple, but not anyone can look at business financials and make sense of it. Sometimes they just look at the bottom line and they just walk away. They're like, we're done. And I'm like, oh no, we're just getting started. Roll up my sleeves and I love it. Let's get to work.
We love being business owners, but we just, you know, assumed, like, we know how difficult it is to fill in so many generic forms for anything as a business owner, and particularly being, you know, foreigners, Australians, just recently getting green cards, and like you just get put in a box and it's so difficult. You don't know what options are out there, but it turns out there's a lot of options. Options are always good.
There are definitely plenty of options. And as I've learned in the broker space that I'm in now, is that if someone doesn't fit in box A, which is the conventional loan, we've got box B. And so I always look for whatever's the solution that is going to be the most cost effective for my buyers. And if we can't fit them in that box, then we go to alternatives B and C to figure out. Now, the more creative the solution typically comes with a higher price to the client for that. So we utilize those additional boxes as needed, but we always try to find a way to get someone to qualify in box A and use box B as sort of a bridge until they get to the point where we can refinance and put them into box A again.
I love that.
Yeah, so you have your own brokerage now, and so you don't just work with like business owners like us, correct? Like any first home buyers that just working jobs,
salaried individuals, hourly. I mean, just anyone. I mean, whatever you see in the workforce. If you have the stability of income, credit, and the funds to qualify, then, and there's a home that's for sale that meets your budget. That is the key. That is the most difficult part of getting someone into a home today, is not necessarily matching them to the right loan, but it's getting them to find a property that's available within their means to put down that smackdown offer. Because they're going to have hefty deposits up front. They're going to have to go over the ask price, and the hefty deposits that they put up front are generally not refundable if they want it to be a real sticky point of negotiation that is irresistible to the seller. And then that also exposes them to the risk of an appraisal shortage. So if someone goes too far over the ask price and the property does not appraise, the good news is they beat everyone out, but the shadow side of the good is that they may have to make up a difference. And that's just the reality of today's scenarios. However, most of the time, as long as someone is putting down probably at least 10%, there's really nothing that will happen in terms of how much extra they have to put down. But they may see a change in their level of PMI, their monthly mortgage insurance premium might increase if the property doesn't appraise for what they asked for.
Sure.
And so the PMI, when does that kick in, and when do people start being responsible for that, and how does it work?
So anytime a borrower has less than 20% equity, there's going to be PMI. There's some kind of PMI, and somebody's paying for it. Either it's lender paid mortgage insurance, and the client will be paying a higher rate for that, but their higher rate never goes down. It stays the same for the life of the loan. So even when you get to 50% loan to value, you still have the higher rate from when you initially purchased the property. However, if you do borrower paid mortgage insurance, that will cancel automatically when the loan reaches 78% of the original value of the property. So depending on where they start off, loan to value wise at the beginning of their payment schedule, will determine at what point that will automatically cancel. Otherwise, when they get to 80% of the original value, they can request in writing that it be canceled. I have had clients, I've had success that when they've reached 80% of new property values, they've contacted their servicer, who's the lender who you're making your payments to, and they have requested an appraisal to determine a new higher value, and they've canceled their monthly mortgage insurance much sooner.
Yeah. No one likes paying insurance longer than they have to, or more than they have to.
Yeah, exactly.
So yeah, that's key. What do you think about the current market? Like, we first moved to Raleigh in 2004, and the real estate here's always been like just chugging along. And listeners who listened to some of our previous episodes would know that we got caught up in the 2008 subprime fiasco with an investment property here in Raleigh. Do you think it's a bubble now? Like, or how does it differ from like 2008, and what's driving it?
I was here. I was originating in 2008. I remember the scenario very clearly, and the markets are totally different. I mean, they're the absolute opposite. Even though we have rising prices, we don't have enough inventory to meet the demands. So simple economics 101, supply versus demand. Supply goes down and or demand goes up, prices increase. So until there's a correction and a balancing between supply and demand, which I cannot see coming anytime soon, brace yourselves.
Yeah.
We're going to see it. 2008, we had like a 3-year supply of inventory on the available. Clients took 6 months to make a decision because they had so many choices.
Sure. Yeah, wow.
Right.
God, it would have taken me 12 months probably, because I'm...
So you had your pick of the litter. You had your absolute pick of the litter.
Yeah,
and
wow.
so it was the absolute inverse of what we see today.
Oh, the old if only had it bought back then, Caroline. Like, but you
just don't take that path.
No,
right? You
no. Well, we always thought, because we were just on business visas and stuff at the time and waiting to get our residency in. But yeah, it's crazy. I mean, obviously there's a lot of people moving to the area, and it has been for a long time, but it's on steroids right now. But it's all over the world, like across America. It's happening in Sydney, in London, in Vancouver, like everywhere. Like it's...
I have a new hashtag for this.
Yeah.
Hashtag out of stock.
Out of stock.
The world is out of stock.
I mean, it is hashtag out of stock everywhere.
Yeah.
People are out of stock, bodies.
Yeah.
And so new construction is one avenue to build our way out of this. However, there's a low supply of labor.
Land and labor.
And
that we
materials.
can't find the people. Of course, and like you said, like land, there's not enough of that left. When you do find it, the turn times are astronomical in terms of getting projects completed. What used to take 3 to 4 months to complete a house, we're seeing 8-9 months.
Wow.
To complete, and not like a mansion or anything like that. A standard single family home is just taking extraordinary long.
And that's just given the pandemic that's really behind all of this everywhere. There's no other real factors there.
Yeah, this is extraordinary circumstances, extraordinary times, and it's really creating just bottlenecks all over the planet. So it's just not here. So if you're a property owner, great. I mean, you're really, really positioned very well to increase your net worth and your equity, your wealth over time. It's like just an incredible opportunity. If you don't own a home, the cost of waiting is pricier than it's ever been.
Yeah.
And so no matter how difficult it is to get a home today, you can't quit. If you are stable on your job, you have good credit, good income, and you qualify for a home loan and you can make those payments, you have to stay steady and you have to be willing to act when an opportunity arises. I coach my clients all the time and tell them they have to decide in advance. Just when something comes available in maybe like the area, or very close to the area you want, and it meets like 6 out of 10 of your boxes, you just need to decide you're getting it. And then you can make the other 4 out of 10 happen.
Yes.
Yeah.
So there are renovation loans available. People can buy a home that perhaps is like aesthetically displeasing to the eye, but if it has the good bones and they have a good vision, it's a great opportunity for them to perhaps buy a home when others are not interested. When the market is zigging, you want to zag. So perhaps, looking for those diamonds in a rough and being willing to do that is a good strategy for people who are trying to get into the market at an affordable price.
Yeah, we saw a few of the diamonds in the rough when we were looking that had been on market for some time, like some time being 3 to 4 weeks, which is a long time in this market. But they are there, and it really was very telling to us because we sort of had it there as a backup, as a potential, but for us, we really wanted something now and to move in that didn't need a lot of work. So it really speaks to that's kind of what most people seem to be looking for right now. Yeah.
Me too. Absolutely. I would not be interested in a diamond in the rough, but for those who might, who are like trying to like stick out the good fight right now, it could be, it's a part-time or full-time job trying to renovate a property. I've done that in the past and it wasn't my strong suit.
Yeah, no, totally. Like people like to, build sweat equity and, create something that's their own style and space and stuff like that. Like, it totally depends on your situation. But, there's some crazy stats out there. I think Kelly Cipriani, our realtor, said it was the lowest inventory on record. Typically it was like 10,000 listings in the triangle or something. It was down to like 1,500 or something
1,500.
crazy. And then constantly like 50 plus people moving into Wake County every day. Like there's a few
numbers on it.
There's a few moving out as well, but it's just totally supply and demand. It's just out of control.
Well, it's such a great town. I love Raleigh. It has so much to offer, and it's no wonder why people want to come here. I mean, I also moved here 20 years ago, and I'm so thankful for the decision to move here, and it served me in every stage of my life. When I was 27 and I was single and ready to mingle.
I
like it. That's got a bit of a jingle to it.
Yes,
there's your new hashtag.
Yes, hashtag ready to mingle. I mean, it gave me a great nightlife, social life, and things like that, which eventually led to me meeting my husband, and which turned into another stage of my life. And in that stage of my life, where as being a young couple and then having children, and enjoying the parks and of course the fine restaurants and the museums and everything as a family, this place is amazing. No wonder everybody wants to live here.
I agree. I mean, we've lived in 5 countries and traveled over 50, and we chose to live here because it is so amazing. It really is. And I was actually reading, I think it was the Raleigh magazine, the latest issue that came out. I think it was that. And they had some stats in there. And I was really surprised. One of the stats was that Raleigh is like one of the biggest places in the country for families, which I found really surprising. But I was like, well, that actually makes sense because this is such a great place to raise kids.
Well, I'll tell you why. So 20 years ago, Raleigh was like in the Rolling Stones magazine as being the top place for dating.
Oh,
And
yeah.
so 20 years later, of
the
course.
the flow-on effect.
There you go. They were mingling, all right.
So of course, the after effect of all the dating in
I love
20
that.
years ago, you know,
Yeah, it's
Cause and
Rolling-
effect is
Rolling-
always there.
Rolling Stones is there you go. They got something to answer for. So we first moved to Raleigh in 2004, like early 30s, and had zero credit history, and soon found out that credit runs your life
Oh my
in America.
gosh.
It does.
And it's very difficult to build credit without credit. It's like going for a job when they want experience and you don't have experience. And like we had to put down like, deposits for everything. Like
$1,000 once for a phone.
to get a cell phone plan, $1,000.
Oh, that's mean.
It was
we
me.
had to put down like, higher security deposit bonds on rentals, like everything.
Yeah, it was
And it was very hard for us to build credit, and like even to get a credit card, or even to get a those cards where you put your own money up front,
Right,
that
secured.
secured card. It took forever.
Wow.
And then, like I mentioned, we got caught up in the subprime fiasco, and obviously, we had to walk away from the property. Fortunately, it was only in Caroline's name, and it eventually drops off your history. How long does that take now? Is it still 7 years or for something like that?
Yeah, 7 years
Yeah.
for collections and foreclosures, and like 10 years for like public stuff, like
Okay.
bankruptcies and things like
right.
Yeah, but so credit obviously is a big part of getting financing and your life in general over here. So what tips do you have for building getting in a good credit situation, and how to monitor it and stuff like that?
So secured credit card is a great entry way to establish credit or to rebuild credit. So secured credit cards typically available at your local bank or credit union. Like you said, you pledge the money, they put it in a separate savings account that you cannot touch, and it's collateral, but you get a card that when you use it is a credit card, so it reports the bureaus. It's a first chance or second chance card that is a great way for people to get started. When I was establishing credit, I don't know, 30 years ago in college, there were people in the credit cards on campus, like everywhere, but they don't do that anymore. So it was super easy for me to establish credit because they were everywhere. But I can imagine that today, without having these big credit card companies on college campuses shoving it in young kids' faces.
Yeah.
I mean, and honestly, it was dangerous, and it wrecked my credit for many, many years
I could imagine.
as a result, because I had way too many credit cards, because you can't give an 18-year-old a credit card.
No.
I mean, you just, no.
So that's
They're not
that's changed
understanding.
a lot.
Yeah, they're not allowed on campus to do that any longer. So now it's either, be an authorized user on a parent's account. That will at least get you something started so that you have a signature, a financial footprint, and then you can start opening up your own cards once you have your own job and you have the responsibility to pay it back. Number one thing with credit is to use it very responsibly. It really shouldn't be used to finance a lifestyle, like a day-to-day. Now, there are huge incentives for people to put everything on their credit card, and I get caught up in that as well. And that's fine, so long as there's the means and the ability to pay that balance off every month.
Yeah.
It's okay to have in case of an emergency. I mean, car problems happen, and typically car problems are expensive for a lot of people, and to have something just sort of like a backup if you still haven't developed your savings yet is nice to have a safety net. But again, there needs to be a plan to be able to pay that off in a short period of time. And there are monitoring apps are a dime a dozen. If you have a credit card, typically you can log into that credit card company and get your score. My bank has a credit alert monitoring system. I think most banks do that. My banking, I have one bank that every time I log in, my credit score pops up in my face, and then also is monitoring my credit and lets me know of credit inquiries and things like that. And there are other things. People are subscribed to Credit Karma and those.
Yeah, we
sort of
use
things as
Credit
well.
Karma. I don't know how legit they are because they actually market their own products to you and that. I don't know how,
I mean, I'm not the expert on it, but
Yeah,
they seem
no.
like they're okay.
Yeah, but it gives us an idea of our, footprint and where we're at and stuff.
Yeah, it's good to check. I had a client email me the other day. He was like, "Hey, I just noticed my credit score went down 25 points. Can you?" Because he's tracking it. You know, he's trying to buy a house and things like that. So he's like really, really like super sensitive about his credit score right now. And he says, "Can you tell me why?" I was like, "Sure." So I looked at his credit report, and I noticed that one of his credit cards was over 50% utilized. Yeah. And he goes, "I pay my credit cards off every month." I said, "That may be the case. However, if the credit card balance on your statement, what your balance is on your statement every month, that's the balance that gets reported." So even though you may get this statement and then turn around and pay it off immediately, if you turn around and go ahead and use it back up, and then you now have a balance at the following statement, then the balances are constantly being reported, and you really get dinged on your credit score if your utilization, that's the level of how much you owe relative to the limit on a credit card, goes over 50%.
Right.
50% is actually considered 100%.
Right.
From a credit scoring usage standpoint.
Wow.
And so the red flags go off. If you go over 50% and you're 80, 100, it's like alarm bells go like crazy. So it's the quickest way to drop your score, but it is the quickest way to improve your score.
Okay.
Right.
So
is that 50% base, is that no matter whether it's a $2,000 credit limit or a $100,000 card?
Doesn't matter.
Wow.
Yeah.
And if you keep your spending the same, that I'm assuming one of the benefits of having your credit limit increased, but you got to keep your spending the same, because then what you're spending is going to be a lower percent compared to your limit.
Yeah. So ideally, you want to get the balances down, as close to zero as you can, and not be carrying balances ongoing. But when you're a business owners or you're traveling constantly, it's almost inevitable. Like you're gonna carry a balance, even if you're paying it off constantly. There's always a balance on it, because it's like the next trip and the next purchase and things going on that, and that's fine. But if you notice like a pattern in how much you're spending, you're like, oh, I'm always at $5,000. You might want to get that limit up to like $15,000 or $20,000. So the percentage is lower. You want to get it under 30%.
Yeah, we do the travel hacking. So we put all our expenses on our credit card to get the mileage points, obviously, because we travel so much. Absolutely. So that's when I've noticed myself, I'm like, oh, hang on, but I'm paying these off every month. And that's when I paid attention to the utilization, and I realized what was happening, what you've just explained. And then when the limit increased, I saw that percentage go down. I was like, okay, as long as I'm not spending anymore. Yeah.
Like you guys said, it's a game. I mean, it's just like you just have to know what are the rules of the game. Don't use credit frivolously. Like use it, but with a purpose and intention, and a knowing that you have the ability to pay it off. It's not a free-for-all. It's not free money.
No, it's not.
And interest rates on those things are
very expensive.
It's double digits. So it's not meant to carry a balance. I mean, the best way to utilize credit is to definitely pay those balances off every month.
Yeah, so playing the credit game. So what are some good and bad lines of credit to have open? Like is it true to have like an auto loan and some store cards, some credit cards? And then you mentioned student debt loans before, like how that impacts everything.
So your credit score is a combination of a variety of factors. One is your number one, on-time payments. It's the number one thing. Second thing is the utilization that we talked about. Then it's the mix of credit. Like the more varied your mix is, like the more the algorithm likes it. Like, oh, this person's responsible. They can handle installment debt, which is things like your student loans, car loans, mortgage debt, and they can handle this revolving debt. Like they're managing this very well. It likes people who are managing debt and managing it well and paying it on time and not overutilizing it. The next thing, and this is the thing that I think trips people up a lot, is length of time accounts have been established.
This was always our problem.
Yeah. Ongoing problem. Well, we're getting there now. We've had a bit of history.
So it favors those that are loyal,
right,
that keep the same debt open for a long period of time. So if you have a college credit card, keep it open. Don't, even if.
So you're saying keep it open as in like just have a zero balance, but don't use it, or don't close the account?
Don't ever close anything. Just don't close anything, especially if you're trying to buy a property. Right. Now, if you've got what you need and you need to close some stuff off for your security, your safety, for perhaps identity reasons, if your identity is requirement, you do what you have to do and don't worry about your credit score. Okay. But if this is like really important, if like every point matters and you're really trying to get a credit score over 740, which is sort of like the magical number to get the best rates in mortgage, then these things come into play. So I have found that when people have just paid something off, even if it was like a car loan, their credit score went down because their longest credit line that had the best history is now no longer reporting.
Right.
And then if you have new credit that doesn't have a history of reporting, then that also works against you. So you sort of like want to establish credit and do it in layers, but maybe just keep it going. Don't be frivolous with, I have this balance transfer, I'm gonna do this balance transfer, and like every 18 months rotate the balance to something else and close the account behind it. That is definitely a sure way to keep a credit score suppressed.
Yeah, it's such a game, isn't it? Even when you think you're doing the right thing, like you said, paying off that auto loan, you get dinged, and then eventually you recover, I guess, slowly if you do the right things. But so much to monitor and stuff and that. But
it really is. But there's a lot of financial resources available. I think the CFPB has a lot of credit education. Fannie Mae and Freddie Mac have credit education on their sites. I think it's Freddie Mac has Credit Smart. The CFPB puts out great education on establishing monitoring credit. There are nonprofit associations. One downtown, DHIC, does a great job with future homeowners or current homeowners that are struggling with credit to provide consumer education, because these rules are second nature for me, because it's like all I've done my entire professional career has been embedded in credit. But I realize, and honestly, I'm so thankful that I went into financial services, because I didn't have this training at home. I didn't know about credit. And like I said, I started off a credit wreck, and it almost cost me my first job because they pulled my credit.
Oh, wow. And they can do that.
Yes, absolutely. And because I was going to work for a bank, they wanted to make sure that I was financially responsible. And I had all those credit cards from college I was telling you about.
In America.
Yes. And so I had to explain myself. And fortunately, I did get the job, and that was the beginning of my career. And then because of the professional training and bathing and constant courses and credit training, I've become an expert at it, and it has been helpful for my personal use. And
so
I mean, you just look at that. It just blows my mind when I think about this. We're having this conversation, credit controls everything, finances is so important, and all of this. And then we go back to school. None of this is being taught at school. This is just kind of like a side note, but why aren't we empowering our children with these financial courses and helping them to be empowered as adults to make the right decisions?
It's a good question. It's just like the blind leading the blind. Until you have self-awareness around the topic, a lot of people just don't know what they don't know. And so if you're a parent or a school leader and a curriculum designer, and you yourself are not aware of the game, then you're not designing tools and education and resources to help the next generation. I mean, good financial education does start at home. And like I said, I didn't have that growing up, and many, many children don't, and many, many adults I know didn't grow up with that. And so, but thankfully we have this thing called the World Wide Web.
Yes, thankfully.
And if there should never be a question about anything.
No.
And blogs.
Blogs.
There we go.
And great people. Like, so if there's something you want to know more about, you can get the information.
Yeah, you really can.
So one more credit question, and then we'll try and avoid it. So there's 3 reporting agencies, Experian, Equifax, and TransUnion.
Very good.
And when you go for a mortgage, does the lender pull all three all the time? Because it seems to be, depending on the transaction, sometimes they'll pull just two reports. And they seem to be demographically related where you are in the country. Is that?
So it used to be, and like I was reading on this topic recently because I was doing a blog about the demographics or the geographics. It started off that
Sorry, yeah.
Equifax,
I meant geographics, yeah, not demographics.
I think you said geographics.
No,
I think I
did.
accidentally.
No, I said demographics, but yeah.
Anyway,
Yeah.
geographics. So Equifax, I still think it holds true in spite of what I was reading on it. Equifax traditionally is a southeastern credit reporting agency. I believe Experian is more Midwest and TransUnion is West Coast. So, for example, people who bank only with the state employees credit union, and this is not any type of knock on state employees, I think they're amazing. But state employees credit union only reports to Equifax.
Oh, right.
Okay. So if your entire credit life has been with Equifax, when you are, first of all, to answer your first question, a tri-merge is required for a mortgage. So all three,
Tri-merge.
a tri-merge, all three credit scores from each of those agencies are required for a credit for a mortgage.
Right.
Absolutely.
No matter where you buy in the country?
No matter where you buy, standardized mortgage industry requires that. So if you go to apply for a mortgage and you only have a history with Equifax, you're not going to have the other two credit scores. It doesn't mean that you can't get approved for a mortgage, but you may have to provide additional information, or since you'll have one score and 2 0 scores, you may end up getting pricing on your rate based on having no credit score.
Interesting.
Which is just going to be higher. So the scenario doesn't come up too often, but it's just to sort of to draw out the point, like why a tri-merge is required. So if someone grew up always on the West Coast and only banked with local banks there, and they would only have a TransUnion report, for example. And so, and not all creditors report to all three. So let's just say you lived in an apartment complex and you had a fight with your landlord and it was in Mississippi. Well, they only reported, let's just say, to Experian. But that collection is not going to show up on the other two reports.
Right.
And so it could make or break or not be an issue at all. It just depends on what the middle score is. So the mortgage industry doesn't give you credit for your 850 that you have with Equifax, for example, or maybe the 700 that you have with TransUnion, but it's looking at whatever the middle score is. So, whenever you hear talk of middle score, it's like take away the high score, take away the low score, and the middle score is what's called the indicator score or the determining score for either qualifying for the loan program, if there's a minimum credit score requirement, and or it's this score that determines what your interest rate is and how much fees you're going to pay.
Right. So it's not just credit unions that might only report to one agency. It could be just small local banks too.
Small companies, because it costs a financial institution money to report this information. So the smaller the company, like let's just say you do a buy here, pay here at a local auto place. First of all, they may not even report at all. And if it's going to cost them to report, they may only pick whatever agent called on them to sell them the service. And it could be, maybe it's the TransUnion guy, the Zoom call, and it didn't really matter that the Equifax guy was in his backyard. So, it just depends on what their relationships that they have and who they determine who they're going to pay those monthly fees.
Yeah.
So is it beneficial then for a consumer to have credit open with, say, a local bank and then a national one so that you get
Well, it's always best to kind of like identify like, what is this credit serving me? And how does it compare to something else? If it's your first break to get a credit card and it's with a local credit union that's only reporting to one of the bureaus, but it's getting you your start, let's get started. But then as you grow and develop, you definitely need to have national credit lines with companies that are large enough to report to all three. That way you have some equality and balance in the credit reporting, which is really probably only important when you're buying a home that's doing a tri-merge.
Right.
It's probably not as important if you're purchasing a vehicle, which tends to just pull one.
The local one.
Traditionally, it used to be Equifax, but I'm noticing that some agencies are using Experian as their preference these days.
Yeah.
Oh, it's very helpful.
Yeah. Interesting. Another thing when we moved to the US that overwhelmed us and blew my mind is the options in financing. Like in Australia, it's typically just like a conventional loan or whatever. Like we don't have anything like seller financing or lease options or any of these creative stuff. But before we get into any tips for savings for a deposit, what type of loans are available for a first home buyer now, and how much down do they have to be looking at saving?
So it depends on a few things. Credit score being one, and their availability for down payment probably being the two primary factors. And then income is sort of like a tertiary factor. For someone, whether they're a first-time home buyer or a step-up buyer that has good credit, stable income, money for down payment, conventional loan is the way to go.
Yeah.
The reason being is that if you don't have the 20% down and you're doing a conventional loan, the PMI is going to fall off at some point, like we talked about earlier. And also, if you have great credit, your interest rates are going to be based on great credit, and your rate that you pay for PMI will be based on great credit, and therefore the payment for your PMI is going to be small for those that have great credit. Now, if the first-time home buyer or even move-up buyer has perhaps like B grade credit, it's like not perfect, and or their funds for down payment are quite modest and perhaps they're getting a gift, FHA is a great solution. My first home loan was an FHA loan. So like I said, I was just coming out of some bad decisions from college. I did a credit repair, and during that period of time, or it was like a debt consolidation through a credit repair company I did. Nobody wanted to touch me. And then 6 months after I got out of that and paid it all off, I had sufficient credit. Voila.
Hot news.
Yeah, I know. And all of a sudden the credit card offers started flooding, and I was like, oh, I must be somebody now. And then I was able to buy a home.
For anyone listening who might be like us and moving to the country, what's an FHA loan?
Okay, so FHA is a government insured program. So Fannie Mae and Freddie Mac have they are part of a government conservatorship, and the government provides certain guarantees to lenders that do loans with Fannie Mae and Freddie Mac. There are additional insurance programs that the government provides, and they provide 3 types of loans under the Department of HUD or the Department of VA, or Department of Agriculture. One is an FHA loan for Fair Housing Administration. One is the VA loan for Veterans Administration, and one is the USDA loan.
All right. We'll link to all this information in the show notes so people can read more about, because I'm sure you could do a whole podcast on each particular one.
Absolutely.
But yeah, there's options, always options. One thing I love about the US, like endless options.
There's so many. There's multiple ways to get it done, and it's just understanding the client's profile, and again, back to their DNA, and then kind of matching them with the right.
Yeah. Okay. Say someone was going to buy a house next year, like any tips for like saving for a deposit versus paying off bad debt? Like where would you start, or is it better to just start with one than the other?
It is a conundrum to save or to pay off debt. And again, we have to look at the overall profile. I would want to definitely look at that and see where's the highest and best use of the disposable income to allocate towards savings and or to allocate towards that. What's going to give us our most bang for our buck every month? I believe cash is king. The more you have of it, the more options you have, period. And so we cannot abdicate the responsibility to have a regular savings program in place at the expense of doubling down on our debt. It would be better for you to save than it would be for you to double down on debt, unless there was something that could be paid off in a short period of time that you could just knock out that they then could help you boost your savings. A lot of people, when they talk about savings, just like, well, just do a budget, just like spend less than you make. There's 2 parts to the equation. There's income and expenses. And while, yes, budgeting helps you analyze your expenses, the income part is something that a lot of people ignore. And every person has the right, the opportunity, and the responsibility to do better for themselves. And this is a land of opportunity. I mean, you guys, come on. I mean, you are absolutely beacons of hope in this area. It's just incredible. And I would advise people who are trying to troubleshoot, like, do I save or pay down debt? Is like, look at the other part of the equation. What can you do? There's so many ways to make money.
So many.
So many ways.
Especially in the sharing economy we have now.
So many ways to make money. So what can you do and what can you do better that's going to do better for yourself? Do you need to take a training or a course to get a promotion in your job to boost your salary to the next level? Do you need to step up at work to take on responsibilities in the leadership world in order to, gain attention from your superiors that will boost you and support your salary? Is there a unique product or service that you can educate, consult, build, or provide the local economy that's going to create value? Like, what value do you create? We're responsible for the creation of the value that we put out into the world. And I think if people would stop focusing on where's my money going every month and start focusing on how can I earn more income, like we would all be in a much better place, and we would knock out both sides of the equation. We'd boost our savings, annihilate our payoff of our debt, and, have the ability to buy the home of our dreams.
I love that. I have such a big belief in that, and I've said it for so long, since I was 21 and first started traveling, because so many people would say, I want to travel because I can't because I don't have money. And I would say, well, why don't you switch that phrasing and say, well, how can I find the money, or how can I create the money? And I don't know why I've always had that way of looking at things. I think I just decided I wanted to travel and would make it happen no matter what. And because of that decision, I ended up realizing that I could work 2 or 3 jobs, and I could go and live in another country and teach there. And there was all these opportunities that open when you change how you view the world. Suddenly these doors start opening up to you. And we know as entrepreneurs that it's a rough ride because you often don't have that steady paycheck. But I know that we can say, well, we need X amount of money for something. What can we now turn around and create in our business to bring that money in?
It's mindset.
So, so powerful.
It's beliefs, and I don't think in self-talk. I think it starts with the self-talk and the awareness of how we talk to ourselves every day. And are we talking ourselves up, or are we talking ourselves down? And if we have the belief that, like, I don't know how I'm gonna buy a home next year, but I am, like you said, like, I have the belief that I need to do this, and I have the passion for it. I'm gonna figure out a way to do it. Like, engage with some professionals, like talk to a mortgage lender on how it can happen. Look at your life and where other areas you can take responsibility for increasing your income and decreasing your expenses. Because if you believe you can, you will find a way.
Yes. And the importance of having people on your side. And I just want to mention, working with you, I thought it was just going to be, okay, we work with April, she helps us find a mortgage, we sign the papers and we're done. But what I loved about working with you is you would send us little messages before we were putting in a pitch or an offer, and then it'd be just, we've got this, and just these little positive messages. I'm like, oh my gosh, this is just so nice. Like, you helped us get excited and believe, okay, we can do this. And I think that's so important, especially when something as big as buying a house and in the current market. Like, you kind of need that other voice saying, let's go for it. We can do it.
Thank you. And I think that's just has come out of just a response to what I've witnessed. I've had many home buyers just feeling dejected on the sidelines. I mean, I have clients that I started talking to February and March that still haven't found a home yet. And so I reach out to them and, offer them encouragement and, advice. A lot of times, people have made multiple offers and have lost multiple times, like past 10 times, it's like, just don't give up. Just, it's out there for you, and you have to, just be wise but be ready and just know that when it's meant to be, it's going to happen, and like nothing's going to get in your way of making it happen.
Yeah,
So
I
true.
remember how dejected we felt after we missed on that first home because we really wanted it, and then I had to think like, okay, perspective. There's people that have been in the market for like 12 plus months looking like,
You guys were lucky.
well, just
We were
we need to stay the
yeah.
course. We need to be
You did
persistent. But you were very fortunate on the third offer, like knowing how tough it is out there.
Yeah.
Like the third offer.
Third time's a charm.
Yeah.
Yeah, I think you did speak about it, and I think going in, we were very clear on what we wanted. We had done all of that sort of back research and understanding what we wanted and knowing what was a must-have and what would have been great to have. And I think you mentioned at the beginning about knowing what your 6 out of 10 is, and I think that was the house we ended up putting that we got. I think it was a 6 out of 10, and I think it got to that stage where we had to get realistic, and it was like, you know what, this is a 6 out of 10, but it's a good 6 out of 10, and we can do things to get it up to that 10. So I think when you mentioned that, that's something really important for people to think about.
Well, thank you for the encouragement. It helps to reinforce that I'm on the right track.
Yeah, and just to that 6 out of 10 point, and like Caroline's point, like before we started looking for a house, like we created a checklist. We want like 3+ bedrooms and an office, like a double garage, a deck or a space to build a deck, and a screen-in porch. A pool would be a bonus. But that obviously all comes at a price. So how does somebody figure out how much they can afford as far as like a monthly repayment and the deposit and stuff like that?
Very good. The short answer is, how much can you afford? So the answer is the question is like looking at your finances. Don't let the lender tell you how much you can afford.
Right.
Let the lender confirm that you can get the loan for what you can afford. Meaning, if you're paying $1,500 a month in rent right now, and you're not saving a penny, you probably can't afford a payment over $1,500.
Yeah.
Right?
Yeah.
Like if you're already stretched thin at $1,500, you probably need to stick to $1,500. But if you're paying rent of $1,500 a month and you're saving $500 a month or saving more, and you're still like spending frivolously and you've got extra, well, you can take a look at what could you realistically afford to where you're still living the life you want to live and you're still putting savings away. Like I always ask what is it that you can afford? And then I'll do my math to assure you that you could get a loan for that. So that's sort of like, I do my loan qualification as a check and balances system. Oftentimes people don't know the answer to that question. And then I have to ask, these simple questions like, well, what are you paying in rent and what are you saving right now? Because that's the gauge, is that what are you currently spending and how are you living at that level and how does that payment translate into a loan? And so I have just some little math tricks that I use when someone gives me like what their payment is for me to solve for what they qualify for in a loan amount. And then how much of a deposit can you afford? I mean, it's just like, how big are your pockets? Like how much can you afford? Like, what do you have available? You can only give what you have, or that you have access to. So many of my clients have used gift from family for deposit. That's a popular choice. And the other one is 401k loans. That seems to be like a sort of a secret honeypot for people that they need to, that they forget about and they don't realize they have it. And they just repay their 401k loan. It's their own money that's just out of their payroll deposits every month. And the interest rates are typically very reasonable, and it's like this sort of like nice little gap filler. So if they need 20 and they only have 10, but they have access to the other 10, instead of waiting a year to save the 10, they can borrow it from their 401k and then not be hit with any type of tax.
That's great. I never knew that. That's good.
Yeah, cool. Okay, another thing that was very foreign to us as being foreigners, and well, I guess this is relevant to anyone outside of North Carolina. Not only do you have to think about your deposit, but this due diligence money, your DD money. Do you want to just explain that briefly in your own words and like the game that's going on with that right now? It was really intimidating and overwhelming. The amount of figures out there now. Like I understand why it was created initially, but obviously we're in unique times.
Yeah, due diligence is unique to North Carolina, so this is probably not something that if you're listening to this outside of North Carolina is probably particular to your state. Talk to your local professional about what deposits are refundable and not refundable up front. Due diligence was created back when those clients had multiple options and they could just cancel a contract because the neighbor had a better yard and went for sale. And so due diligence was created to protect the seller so that the buyer could walk away for whatever reason, but the seller at least had compensation for their time off market. Due diligence has now become like the chip that that strong buyers are playing to incentivize the seller to accept their offer. The due diligence money is a check that's written directly to the seller, and the buyer does not get it back if they walk away from the property. So if you make an offer on a property, you put down $10,000 in due diligence and you get cold feet and you want to cancel the contract because you're just like, I think the house is haunted, I just can't do it. Then you have given the seller $10,000. Okay. Now, this money is a part of your down payment. So if you're, let's say it's a $400,000 house and you're going to put down 10%, which is $40,000, and you've given $10,000 for your due diligence, well, now you only owe the difference in your down payment at closing, which would be $30,000. So a lot of buyers get concerned that they put the due diligence and then now on top of that, they need their down payment. And I think that is the biggest,
for us it was at the start, confusing.
That is the biggest confusion I see. And then they are so elated to learn.
Yes.
That, I didn't just give 20 and now I need another 20. Like that 20 is part of my 20.
Yeah.
Like I feel like people are like dancing on their coffee tables when I tell them that because they're like, that's so crazy that people will do that thinking that they still have to come up with down because they're just so, I don't want to say desperate, but they're so eager.
Yes.
They're so eager to get the property that they're willing to do it. Earnest money is being really played a lot less now. I mean, earnest money traditionally would be the deposit that you provide, and it goes to the escrow agent, typically the real estate company, the law firm that will be settling the transaction, or the real estate company, like your the listing agent's escrow account for their broker, their company. So earnest money would be refundable if you decided to cancel your contract prior to the due diligence date. There's two dates in the contract, the due diligence date and your close date. The due diligence date is the date by which you as the buyer perform all necessary inspections, appraisal, get your loan approval, make sure like everything is good so that you're sure you're going to buy the property. And then if for something comes up during that period, like it turns out the roof needs to be replaced, the foundation is a mess, and you don't want to go forward with the transaction, like it's just going to cost me too much and I'm done, then you could get your earnest money back. But that due diligence is still with the seller. Like you don't get the due diligence back like ever. I mean, unless there's like misrepresentation.
I was just going to say, is there any reason? Like misrepresentation of the listing or
more than
state
likely
of the property?
Misrepresentation.
If they know of a particular bad issue.
Like termites and they don't disclose.
Don't disclose. If there's something that turns out to be obvious that they must have known about it and they did not disclose it, then you would need to raise that up with the broker in charge and have them advise you on what to do next. Yeah. So I'll stay out of that lane in terms of providing guidance there. But what we're seeing is buyers are waiving their due diligence period. Like they're just doing 0 days due diligence. Because like they just gave you $20,000.
Yes, that's what we did. Yeah.
Like you're gonna close. If you just wrote a significant check that's most of your savings, whether it's $5,000, $10,000, $20,000 or $50,000, I've seen a due diligence check as high as $90,000. If you're going all in like that up front, you're closing. You're going to find a way to close. So the due diligence period is becoming less less utilized
Mm.
these days because
Yeah.
the due diligence funds are being more heavily utilized.
Well, that's what we
That was
ended
what we
up doing a zero
Mhm.
due diligence period. And we'll talk about some other creative ways to, strategize a winning offer. Do you think there'll ever be, it's so hard to compete that people have like 90,000 due diligence. And I understand why a seller would take 90 over say 10,000 due diligence, like makes sense. Do you think they'll ever, but it's so hard to compete. It's kind of like seems like an unfair playing field. Do you think there'll ever be like a percentage cap on how much due diligence?
I don't know, but there needs to be change in that area, and I'm not like really connected to what's going on in that space. But I've heard other agents talking about it, that they are going to the commission and they're looking into it. Something has to change. I don't know from a legal standpoint what will change or how or when, but it needs to change because I think that it puts sellers in the position to take advantage of buyers.
Yes, yeah, very much so.
Yeah. Okay. Looking for a house. The other thing we had to think about was getting pre-approved, like to even just compete. Because Kelly was saying, like, if you look at a house and you like it, you got to put in an offer that afternoon. So that's obviously important. Get pre-approved.
Yes, absolutely. A pre-approval means that your loan is good to go. Like the loan professional has analyzed your credit, your income, assets, knows that you meet the guidelines for the loan. It's way more serious than a pre-qualification. So anyone can go on any, national online lender and get a pre-qualification instantly. But it's only as good as the data that is entered. And what you think your income is and what the lender thinks your income is can be completely different. And, I don't want to get into like all the different ways because that's probably its like own podcast on income analyzation. But don't trust yourself is all I have to say. I mean, unless you are a base salaried employee and you're not counting any additional income and you're on that same job for 2 years, I mean, those folks are probably safe to say, okay, if I make $50,000 a year, I'm going to put in this cell $50,000 per year. And if it, then that's probably okay. But if you're a self-employed individual, you cannot trust any of that. And if you are relying on any additional sources of income like bonuses or commissions, you can't trust yourself to know the answer to that question based on how the lender is going to analyze your income. It's far more tedious than you think. And so you really need to have that looked at by somebody that will pre-underwrite the loan. And that's what I do with all of my files, is I pre-underwrite them. And if I have a question, if I am not sure, I send it to an underwriter at a lender and I talk to them. I'm like, hey, this is what I'm coming up with income. Is this what you'll come up with income? This is my interpretation of the guidelines. Is this your interpretation of the guidelines? So there is some gray area there that really you need someone that is going to go that extra mile to make sure that the loan is not going to go sideways, because loans go sideways.
Yeah, that's another thing we loved working about you. Not only were we pre-qualified, but we were pre-qualified for a particular property, like to put in an offer that afternoon, just to help us compete.
Yeah, well, it gave us a greater sense of security given the circumstances and putting down these due diligence and all that. You really want to be certain that you're all in and you can be all in.
Absolutely. And not necessarily in your scenario, but for lots of buyers, if they're buying at the top of their budget and we're estimating taxes and insurance, it's really important to know ahead of time what the taxes and the insurance are for the property. Because when we're pre-approving folks, we're guesstimating. Like, we have a fictitious property. We don't, we have an idea of the sales price and we're going to guess the taxes based on some, rules of sense, but it's nothing like a replacement of actual data. So oftentimes I have my clients like, hey, like before you make an offer, please let me check out the property address. I want to look at the taxes. And a lot of my clients who are also sensitive to the payment, and they want to be sure that they can afford the property if they've stuck their neck out. So we recalculate the payment based on known variables. Now we know what the taxes are, and that's our biggest sort of like wild card, because insurance is typically within a standard range, and of course the principal interest I can calculate. So it is good to, before you make an offer on something with a property in mind, just say, ask your professional, like, hey, just want to get your opinion on this property. The other thing that I'll do is I'll look at the county records, make sure that the sellers have owned the property for more than a year, because if they've owned the property for less than a year, we need to kind of delve into the scenario a little bit more to make sure it's not a flip. Flips are okay, but there are rules around buying a flip that a buyer has to be aware of. Typically, they're safe in most cases to purchase it 90 days after somebody else has purchased it. But in some cases, that needs to be 6 months or longer. Some of the government insured loans. So I often ask for those property addresses because I'm doing a lot of kind of research behind the scenes to make sure we're not going to have a problem like 3 weeks from now.
Yeah.
Wow.
Yeah, the
So
other
much to think
stressful
of.
thing for us, besides figuring out the due diligence and deposit and stuff, was the appraisal side of things, like, and potentially having to fill in a appraisal gap, because obviously properties are selling for way over list price and stuff now. So yeah, there's another thing to think about that you can cover any potential gaps in appraisal.
Yeah, as long as we are, in most cases, 95% of the value is determined by the lesser of the appraised value and the purchase price, we're fine, and the borrower does not have to bring additional funds to close. Where it really becomes problematic is if somebody is putting down their 3% for a first-time home buyer. They can put down as little as 3 or 5% for a move-up buyer. If they're scraping all of that together, and they have just enough to close, those are the ones that have the most worry, because they can't make up the difference. Because those, in the scenarios where you're just bringing exactly what is the minimum requirement, if you're short, you got to make that up dollar for dollar. And if you don't have the extra funds, means, or access to it, it will derail the scenario. Fortunately, it's not happened at all. This year, all of my buyers have had the additional funds. They were fine with the shortage. I think the worst one was $50,000 short, but they were putting down a large enough down payment that it didn't matter at all. Like they weren't even touched. They were, touched with the PMI was not even an issue.
Right. Wow.
In most cases, the best case is typically just the PMI increases of dollars.
Yeah, awesome. So if someone's looking to buy a house, say in 2022, is there a checklist of steps, like, to start getting ready to get pre-approved?
Yeah, the first thing is you have to talk to a mortgage professional. I mean, you need to start there.
Yeah.
And you might have to talk to several, because what I've learned from being in banking for most of my career, and now having my own independent brokerage, and now that I have access to multiple lenders, is that guidelines vary on a lender level. So there are national guidelines that apply to everyone, but then lender specific, there can be preferences that lender has. And so if you're speaking to one particular financial institution and they don't have something for you, or they're telling you, no, you can't afford it, don't just take that and go, okay, I'm just not going to try. Talk to someone else. Definitely talk to a broker that has access to multiple loan programs, that understands the guidelines from a wide variety, because they'll know that if you need something special, that they might be able to switch it. Because when I worked in banking, I knew additional loan programs out there existed. I would just have to tell my clients, listen, we don't offer that, but here's a friend to a broker. Go to the broker. She'll be able to help you. And I referred a lot of loans to outside lenders that were not in the banking industry. it's probably the reason why I just decided to just become a coach myself. You know, I was like, well, I'm sending all these
doing
people
it anyway.
I can do what the banks do, and I can do what the banks don't do. So let me just do it myself.
Yeah.
But anyway, there are options.
Yeah.
And if you talk to multiple people and they start telling you the same thing, then you might want to just take note of that and then go to work on it. But don't be discouraged by it. Just take it as a learning experience. And if the issue is credit, you know, contact a nonprofit agency to get credit support. If it's income, you know, work on ways to improve your income. If it's your expenses, work on ways to decrease that. You know, all of it is solvable. You know, I mean, just where you are right now is like a snapshot in time. It's not a sentence of where you're going to be 10 years from now. So don't give up.
Yeah,
you know,
so
just take the advice, learn from it, and then move forward and do what the professionals ask. I counsel many people, like, here's what you need to do. And then I'll follow up 6 months, a year, and continue to follow up with them. And oftentimes they're not willing to do the work. You have to be willing to do the work. If you don't ever change, nothing changes. Yeah. So it is important to listen to the wisdom of professional guidance. If you're not ready now, but they're going to give it to you to tell you exactly what you need to do.
Yeah. I love that.
Excellent. Another cool thing you did for us was shoot a little video to send to the listing agent
I love that.
as being pre-qualified for that period.
Yes.
Well, that was very creative. We got good feedback from that from
It
the
was
listing
fun.
agents.
It was a lot of fun. I sent several videos to each of the listing agents. They were like, "This is really cute."
Yeah.
But yeah, I just try to find creative ways to give my clients a competitive edge. You know, I work, in tandem with the realtors. You know, we're coaching you both on the sides. Like Kelly's letting you know what's happening in the market, what due diligence is, how much you might need to do, what's the activity on this house. Like she has access to that type of information, like how hot this is or how cool it is, how long it's been in the market, things like that. And then on our end, I'm trying to think of ways that I can make sure that the listing agent's comfortable with the financing piece. And so the video has, become my little signature that I do for my clients, and it's a ton of fun. So I call it a lender testimonial video. And I just say, hey, Craig and Caroline are amazing. Their loan's good to go. If you just need a signed contract, sign the dotted line, and let's go. It's like less than 45 seconds.
It's so personable and real, and it's great.
Thank you. I appreciate it.
Yeah, because all the listing agents that we dealt with, there's no love letters that are allowed anymore. Is that right? Or they're not accepting love letters.
They don't need them.
They don't need them.
Yeah, that's right. Yeah, I mean it's become a just very fact based because just what's your highest and best offer, and so. Realtors are creating spreadsheets. The listing agents are getting all the offers in. They're creating spreadsheets, offers 1 through 17, offer price, due diligence, close time, and then they're sifting through that to figure out what's the best combination that's working for the seller.
Yeah.
It's a seller's market. And so when you are working in such a lopsided negotiating strategy, you have to appeal to what's important to the sellers.
Yeah, it's such a crapshoot because you have no idea what anybody else is offering for purchase price, due diligence, and you don't get any feedback. Like you said, it's just highest and best offer, and whatever that means.
Yeah, it's just the experience. You guys got the right formula down on what you said, the third try, and so it's just. I think it's just a real trial and error. And also I think. If you're getting a comparative market analysis from the agents, that's very helpful in understanding what the other properties have sold for. If you're seeing that they were listed for $400 and selling for $410, and then this one is listed for $410, you probably don't have to offer $500 for it.
No, that's right. That's what we did with ours, looking at ours.
Exactly. Yeah. So as much as flipping it on the other side of making decisions based on the facts and numbers, you can utilize that historic data as well and sort of help make an educated bid the best you can.
Yeah. Well, no, you made the whole process a lot easier for us, and you've shared a lot of great reasons already, but anything else you'd like to share of why someone should work with a mortgage broker and the benefits working one-to-one?
Yeah, absolutely. I mean, I think the sheer fact that a mortgage broker has more options, I mean, that's irrefutable. I worked for a bank many years, and I was the same person I was at the bank.
Yeah.
You know, I gave great advice. I worked really hard. The bank I worked for was great. There is something for everyone out there. So, but one thing that you get when you get a broker is that you have options, so that if your scenario means that you get a better rate with option 1, then you go with option 1. If it means you get a better rate with option 10, you go with option 10. So only the broker really knows all of the arsenal that they have to work with, but they have the arsenal and those tools that they can help equip you to really get the best financing for your situation.
Excellent.
Perfect.
One more quick financing question and then a few fun questions and we'll wrap it up. It's been awesome.
Yeah.
What's the number one mistake home buyers are making out there right now?
Oh, good question. They try to figure it out on their own and they don't talk to anybody.
Yeah, that's a good, yeah.
I mean, just think of it just like if you have like any kind of ache in your body or a rash or whatever, and you start like Googling your symptoms.
You go down a rabbit hole.
Yeah.
I mean, it's just like, like
Don't
all of a
do
sudden
that.
you think like, you've got malaria or
Yes.
something. And you're just like, no, talk to a professional, go to someone who knows what they're doing, not what your friends did, not what your mom and dad did. And honestly, if anybody that you're like in your circle of friends, family, if they haven't bought a house in the last 6 months, their advice is totally outdated.
So true. So true.
I mean,
I don't know what they're
I thought you were
talking
going to
about
say
now.
a couple of
Another
years, but
millennia.
yeah, like probably, yeah.
it's like
6 months
another.
It is,
truly,
yes.
It's like truly, truly different. I mean, really, like every 6 months since the pandemic has been its own little like micronucleus of events and market happenings, and it's just evolving so quickly and ever changing. So if you have a friend or neighbor who has recently purchased a home, talk to them, get their experience and everything, but definitely speak to a professional that knows what they're doing, that can advise you. And then they will give you the steps of what is needed from that point forward, depending on what your situation is like. Maybe it's improving your credit, increasing income, decreasing debt. Maybe it's just you're ready to go. Like a lot of times people don't think they're ready. And I surprise the daylights out of them. They're like, what? You'll lend to me? I'm like, yeah.
Yeah, that was us.
Yeah.
Oh,
we
wow.
can totally do this.
Yeah.
Are you kidding me?
Yeah.
Like, you'll lend to me? I'm like, yeah, you. So we can do a lot of things more than people expect. I think that most people are the harshest judge and critics on themselves. So don't discount your ability to buy a home. Don't guess. I mean, get confirmation.
Yeah.
Yeah,
So
that
true.
was totally us
That was
because,
us.
as we said, we're self-employed business owners, and being in the travel industry, and COVID decimated our income from 2020. So we, just assumed that we couldn't get a mortgage, and then
It was so
Then you
great.
said the magic words.
yeah.
It was.
Oh,
You
wow.
guys can do this and this and this.
This is not bad. We can do
Yeah,
this.
this has been awesome. Thank
So
you for sharing
helpful.
all your insights and tips and that.
Absolutely.
And
Yep.
do you want to we'll dive into a few fun questions about Raleigh?
Yeah, so Raleigh, if you were to have someone special come visit from out of Raleigh, where would you take them? What would you show off to them about Raleigh?
Oh my goodness. So the State Farmers Market.
Yeah.
I love the State Farmers Market, downtown Raleigh. The museums. Take them to a show.
Yeah.
My husband and I are huge supporters and lovers of North Carolina Theater and the Carolina Ballet. Take them to some of the local restaurants. The State Farmers Market has a restaurant.
I was just going to ask you, have you eaten? Every time I go to eat there, it's
packed.
super busy.
Yeah.
I mean, I got to get up earlier, especially on the weekends. It's popular.
Yeah, I haven't been in a while, but we have definitely been and several times, in fact. And it's so quintessential North Carolina. I mean, they've got brains on the menu.
Wow.
Yeah.
So I think just anytime you can
I guess so they'd
experience,
have
I've not tried the brains.
Liver?
I think they're
If they've got brains, they're going to have liver.
cow brains, or I think
Wow.
they're hog brains. I'm not exactly sure. I did ask one time. I was very curious. I was like, from which
Tell
animal
me
do
more.
these brains derive? I'm not going to eat them, but I'm just very curious. So I think anytime you look at a menu and there's something completely exotic like that, it's like worth the experience of at least just, having a chuckle at it. And we do love eating, and if we can combine the arts with eating, even better. So Iris Cafe at the North Carolina Museum of Art is a favorite of my dad's and mine. So when my dad visits, we love to go have brunch or lunch at the North Carolina Museum of Art. And the Museum of Art is just a great place. I think if you're dating or you have a young family or you have kids, you can go walk by yourself or, with family. It's lovely and beautiful. And then if we were to take them to if I wanted to impress them a nice dinner, I really like Mandolin off of Oberlin. It's, that what you call farm to fork. They support local farms. The food is fresh.
I know the one you mean.
It's delicious. They've got, a nice full bar, so great cocktails. You just feel very special when you're there, and the food is delicious. So our life just revolves around fine dining and parks and the arts, whether they're visual or performing. And so I just love Raleigh. I just love it. It has so much to offer.
It does.
That's fantastic.
Yeah, they're great tips.
Yeah, awesome. Favorite getaway spot in North Carolina?
We don't get away. I envy you guys so much. I should probably be asking you what your favorite getaway is. I will tell you this. Asheville. I lived in Asheville before I moved to Raleigh. And my husband and I did go to Asheville for an anniversary weekend a couple years ago and stayed at the Grove Park Inn.
Oh, that's pretty, yeah.
Yes. I would say if I could do more getaways, I would go to Asheville and I love the Biltmore.
Oh yeah, I love the Biltmore.
Yeah, Western North Carolina is just beautiful. It's just absolutely beautiful.
Yeah, we love it. And so if we were to offer up the phrase to you to sum up Raleigh, and we said this is Raleigh, what word or phrase would you say to describe?
Diverse.
There.
Awesome. Love it. That's
it is.
One of the things I love about living here too. The diversity in every way. In many ways.
And just on so many levels, I just love the diversity of the economy, the workforce, the people, the arts, just the parks, there is something for everyone here. And like I said earlier, it has served me over the last 20 years of being here, from a single person to a young couple to a married couple to, now having children. It's wonderful, and I can see it serving me for the next 40 to 50 years. I just absolutely adore it.
Yeah.
Awesome.
Same level of love.
Last question. I'm always curious to ask this. We're Australians, so what comes to mind when I say the word Australia?
You're probably, this is so probably cliche, but I think koalas.
Oh, yeah.
Yeah.
Most people think they're cute and cuddly, but they can be very vicious when they fight.
Really?
Yeah.
That was the first.
That's on YouTube.
That's on YouTube. First thing that came to my mind. I actually have a friend of mine. She coached me for a while. Her name is Jessica Emily, and she lives in Australia. She's always posting on. And so when we opposing winters in summer, so when she's coaching me in winter time, it's 100 degrees there, and it was just so interesting to have an international sort of pen pal, I got to learn a little bit about what was going on there and everything. So
awesome. All right, so how can people find you online, April? Website and socials?
I do have my website is blackwellmortgagenc.com, and we're Blackwell Mortgage on Facebook, Instagram, and LinkedIn.
And we will have all of that in the show notes for everyone listening over on This Is Raleigh. So thanks everyone for listening. Thank you, April. This has been so helpful.
Oh, thank you. This has been so much fun. Thank you. Thank you.
Yeah. Once again, this has been presented by Effluence Media in the Raleigh founded studio in the Warehouse District. Anyone looking for a podcast editor, marketer, publisher, or just wants to get started in a podcast, check out Jason and Cece at Effluence Media, and they do a great job with our podcast.
Yeah, so if you like this podcast, the best way that you can help us is to share it with a friend, leave us a review, and subscribe to it on your favorite podcast listening platform.
Yes. Thanks, guys.
We'll see you in the next episode.